Good afternoon, traders, and welcome to the Blue Line Metals Edge here for Wednesday, February 15th. I'm Phillip, Streible, Chief Market Strategist at Blue Line Futures. Remember, if you need additional information, go to our website, bluelinefutures.com. Be sure to check out our education section and also the research section and sign up for a free trial. Now, something that's new that we're going to be offering, and also the CME, is going to be event-driven contracts. So if you are that gold and silver bug out there, you've got an knack for where you think prices are going to go on the day, you can merely place a binary type bet, and they're all standardized contracts at $20 for the contract. What you're doing is you're going to bet $1, 50 cents, whatever it is, that the price will hit a certain level or exceed or go below a certain level. So something kind of interesting. You can check that out if you go to bluelinefutures.com/CME event-driven contracts. You'll be able to see those there. Now, we did have last night, we had the British pound. They had their CPI come out, and it was a little bit cooler than expected, and also their core CPI. What that did was kind of move some of these markets around, so you're going to be less hawkish if you're, a Bank of England governor. You're going to be more on the dovish side, so you're going to feel like you've risen interest rates enough. So this is a 5-minute contract of the British pound. You can see that it's broken down throughout the day, and it's continued to sell off here, as we're making almost new lows right now on the pound. Now remember that the pound makes up a large portion of the dollar index. It's one of the larger weighted currencies. So if you look at the dollar here today, let's just kind of squeeze this chart out here. You can see that it's breaking out to the upside. So of course, gold, silver, many of the other commodities out there, they just don't like that stronger dollar, that stronger, treasury yield, things like that. So you also had another event that kind of came out, or at least more discussion about China's economic recovery, saying that it's off to a slow start. Well, that's going to impact and weigh in on soybeans, on cotton, on copper. So we're seeing all these different commodities here. They're pulling back. So we could do the rundown real quick. You can see gold continuing to sell off. It's actually broken through the box here. So looks like we might be forming this head and shoulders pattern. This was a big reversal point. This was a point where, you saw the DMI, the minus cross over the plus, and that was really kind of your sell signal at the moment. So no telling how low we're going to go. I believe there's a lot of stops just below that 1800 level, so we're going to want to keep an eye on that if we get that low. Here's your chart pattern on your silver, continuing to break down, take it out through the box here. Platinum, still selling off, took out the critical support level. So I think we're going to come down to a new kind of volatility range on platinum at the moment, and then we'll kind of see where that goes, where it could base out at. But we've got an extreme downtrend right now. This black line's your ADX, moving up, measures the strength of the trend. You've got this DMI minus crossover plus. You got stochastics down or buried in oversold territory right now. So it's looking pretty rough here on the platinum. Here's your copper. Now, copper could be the one that's setting up for a new sell-off as well. If you get this extension up on DMI minus over plus, you start to get ADX turning up. You get this to bury itself back down on stochastics. You're going to see those copper futures, they're going to start a new sell-off here. So we're going to want to kind of keep an eye on that, see if it's going to, do something like that as well. So getting into some of these other markets like the debt instruments, remember when bonds go down, yields go up. So yields are making new highs. That's why the gold market's not doing so well. The 30-year is doing the exact same thing also. The trend neutralizer is because if you look at the bond breakdown, it is short on the bonds and also on the treasuries. Now, on the Aussie dollar, you've got that rolling over as well, because remember the Australian economy is heavily dependent on the Chinese economy. So if you get that Chinese economy slowing down, it's not going to be good for the Australian dollar either. So just firing through these other currencies. The euro's the inverse of the dollar index right here. The yen's really breaking down. Swiss franc's probably sideways, which it is. Dollar index breaking out to the upside. Here's that cotton. It's reversing back down. I know this chart's kind of small, but cotton really hasn't gone anywhere. It's more neutral trend right now. Cocoa is the one that broke out big to the upside, and basically you got some dryness in West Africa. It could be a little bit on, when you get the U.S. equities poking up, they think the economy is going to do well, but, it did bust out to the upside here, so we'll want to keep an eye on that one as well. Some people did get some options on. Sugar looks like it kind of go either way here. We're forming this more of like a pennant pattern than anything. It's kind of like this upward. You're going to get that kind of a pattern going here at the moment. So, we'll see which way that one's going to break out to the upside or the downside. So getting into some of the other markets, you got a big, I identified this as a double top on the breakfast report this morning. Looks like that's coming through. We got coffee prices down 600 points right now. Natural gas leveling out finally. You're getting the March contracts got to come off the board. Beans are pulling back, obviously, with that China news. Same thing with corn. Wheat is the one that looks interesting that we've taken some shots to the upside on recently. I think it'd have to break through, make a new move on the upside. Some concerns about the Russia-Ukraine deal with their current grain deal that they had on. So S&P caught really in this range. Got some more economic data coming out tomorrow. So you're going to have, expand this here, you'll have your PPI and your core PPI tomorrow. So more inflation data. We'll see what happens. Really, for the metals to get going, you need weaker economic data. If you get the weaker economic data, the Fed will be closer to its terminal rate. That's where it finds neutrality, not too hot, not too cold. And then you'll start to have people, discussing when are they going to cut, things like that. And that's how you're going to see your bonds are going to all start to rise. And also the gold market will rise with it. Silver will snap back. They'll think about how they're going to stimulate the economy, and then that's when you get to everything else. You get your lumber, your platinum, your copper, all moving back up with it. So you're going to have to hang tight here if you're long the metals at the moment here. Just remember, position sizing is key, especially in these types of markets and these volatile markets. So again, you got any questions, futures, option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.